How's it going out there? It's November 2nd. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down headlines and tell you what's really moving these markets. Wow. So first, I want to thank so many of you subscribing to Crypto Intelligence. Since I'm buying a new house, now I can build it, so I appreciate it. We just closed our special offer on Friday. Man, we had a lot of subscribers, and I'm really happy for it. Really, really happy. Excited. For those of you who subscribe, you're going to see our new pick come out on Wednesday. That's going to come out after the close. It's a direct play on the trends I talked about in that video. DeFi, NFTs, the metaverse. We have one company in our portfolio. Great play on metaverse, and this is one of the recent picks that surged. I mean, really, really surged over the past few days. I think a lot of you were able to get in that because we all know that Facebook announced they changed their name and they're going into the whole metaverse thing, and now everyone's going crazy with it. This is a company that has a platform already built. It's absolutely amazing. I showed it in my video, so it's really, really cool. That stock's up. But this next pick is also a play on all three of these trends combined: DeFi, NFTs, metaverse. So, you'll see me break this down in video format and Crypto Intelligence. So, my apologies that you have to watch me the whole time, but breaking down that research behind the new pick and, sharing sites that I'm using, some free, some paid. This way you can follow along the whole time. So it's, a big educational component to this product. So I'm so happy that so many of you subscribed. I just see so many opportunities. It's very, very exciting times. Really excited to help you guys learn more about crypto since I'm currently learning myself. And that's why I love this industry so much. That's why I love my job, right? You always learn something new in different industries. But, man, everywhere you go, it's incredible. This is where you're seeing innovation from. And I think you're going to see incredible growth in so many names, in so many areas, and really exciting times. So thanks so much for subscribing. Second, and this might sound a little corny, but I want to express how happy I was. The happiness that I saw during Halloween, which was on Sunday. And we wound up trick-or-treating another neighborhood. I told you about my neighborhood. It's filled with a bunch of older people that hate life and hate everybody and never wave and stuff like that. So it used to be a great neighborhood to go to Halloween. Now it's not. So we actually go to a different neighborhood, not that far away, one of our friends. And there was like hundreds of kids out. I mean, tons of families having chairs outside the houses. So it wasn't just like, you're ringing a doorbell and trick-or-treat. Like, they were outside and hanging out, and they were dressed up with their costumes. I mean, it was just really, really cool. And then they do Halloween all the time, so all the families know each other in all these houses. There's probably about a good 7-8 blocks. And, they have special treats for the parents as well, which are Jell-O shots as you go around. And, of course, the Jell-O shots are for people that aren't driving their kids and stuff like that. You don't want everybody to get drunk and drive their kids home and crash. But it was cool seeing so many people enjoy themselves, having fun with their families without the mandates, without the masks. We all know that, hey, if you're older, we get it, right? You have underlying conditions. Maybe you don't want kids coming to the house. That's okay. That's not a problem. I get that. But it was one of the first times in a while where nobody was talking about COVID. Nobody was talking about masks. They were just having fun and laughing. And I know Florida is seen as this place where we're irresponsible. That's what's being portrayed. So many media outlets. DeSantis is killing people. But looking at the facts, our kids went back to school right away, one of the first states. Economy remained open for the most part, which didn't force a lot of people to lose their jobs. One of the first to remove mask mandates. Of course, Florida is one of the states that are against vaccine mandates. It should be a choice. And you know what? Florida went from having the country's highest infection rate to the lowest in about 2 months. And you know where that stat comes from? The Wall Street Journal. They actually reported that. They reported that yesterday, right? The Wall Street Journal reported that. It's interesting. With the title, Media Ignore Florida COVID Recovery. It was saying how CNN, MSNBC continue to rip this guy, even though he turned out to be dead right, which was not that difficult if you actually looked at the data showing that kids don't really, are not really at risk. Almost 99 point whatever, 99.6, whatever it is. They don't transmit the disease. A lot of them are immune. And, looking at the stats, I think they adjusted accordingly. And it was nice. It was just, Yeah, it's been really cool in Florida. I just think that, yeah, even now when I watch the media, and I like to watch different media sites just to get a good feel of what's going on, even no matter what side you're on, that's what you should do because you're going to get ideas. You're going to know how people are thinking, what people are saying. Trust me, at least it's a lot of great stock ideas in terms of buying and shorting and stuff like that. But, looking at Halloween and going with my kids, it was just really cool that everyone's having fun. And we went from 4:30 to 7 p.m., and then I took them to Spooktacular at the Jacksonville Zoo, which was awesome. They actually have zombies chasing you now, and they gave away candy, had DJs playing great music. Again, it was just nice to see everyone's family laughing and having so much fun, right? That's what life's about. It's about your families, right? It's making the next generation better and better and better, and just to see everybody happy and smiling in a world where there's so much hate right now, right, and anger. It was just really, really cool. But the Jacksonville Zoo, I love. I mean, it's a smaller zoo. Every time I go, I have fun, even during the holidays, and they always have special events. But this Halloween did a great job with the zombies. I mean, that was the first time. These zombies were like chasing people. They were chasing people. It was pretty cool. And, for me, I probably would have let the tigers out and the apes out and chase people around. I think that would have been, probably would have went more viral. Had a lot of fun during Halloween. But, again, we know how social media is, how crazy it is. But in all seriousness, they did a good job. It was fun and exciting, but really enjoyed Halloween this year as, again, I just found myself looking at families, looking at people, and seeing everyone smiling, laughing, and you don't really see that anymore, right? It's freaking crazy out there. So nice to see people living, right? Doing what really matters, hanging out with their families, and being happy, and most importantly, right? Just said it, living your life and having fun. Because that's probably going to change in terms of fun if you let it. Because midterm elections around the corner. We have a big election today, actually. It's, again, both sides of the media going crazy over it in Virginia. Going to see a lot of shitty marketing campaigns trashing the party you represent. And you'll start seeing those in a few months, right, with the midterm elections. So social media, if you're active, get ready for the trolling. The bots in full force. Trying to get that anger out of you. Again, just remember, have some fun. Enjoy life. You guys deserve it. Now, for the markets, and this is a market podcast. I want to talk about happiness and Halloween all the time, but looking at S&P 500, almost all the major indices have record highs. You have earnings season kind of coming to a close, but there's something that's interesting. As someone who looks earnings season is my favorite time of year, listening to these conference calls and reading the transcripts and getting ideas and seeing how these guys are managing through tough times and inflation and supply chain issues. The one thing I noticed is the separation in names within the same industry. A lot of times, like COVID, everything went up. Everything went up. Some stocks went up a lot higher than others, but everything, just went up no matter what sector or wherever you were. Almost everything just surged, completely surged. You're not seeing that right now. I mean, look what FedEx reported. Horrible numbers. And look at UPS, great numbers. I thought Google and Microsoft reported great numbers compared to Apple and Amazon. Apple said seeing supply chain disruptions. They're actually cutting iPad. They're going to wind up cutting iPad sales because they need to put, they got greater margins on the 13, a new phone, and want to put more capacity into that. Amazon, their numbers missed. They're seeing supply chain issues, although I love Amazon. I think it's an incredible buy here. I mean, if you look at, companies get hit a lot of times when expenses go higher, but you have to look at where their expenses are going. And sometimes they're going to places that are going to ensure long-term growth. And I see that so much. CapEx goes higher, they get crushed. I mean, margin a little bit lower, and these names get nailed and say, wow, we didn't know costs are going to be that high. And again, it takes a big bite out of earnings, but you have to look what those costs are, right? You have to invest money to make money. You have to invest, whether it's marketing strategy. Amazon here is investing in people. I mean, that's a great investment right now when nobody can hire anybody. Look at Starbucks, what they reported. Anyone who goes to Starbucks knew they were going to blow the quarter, right? They knew they were going to miss the quarter. It's terrible. And I can't tell you how many times I pulled up Starbucks. There's a lap around the whole freaking place in the drive-thru where I just passed. I used to like going there probably 3 times a week. I go there once a week now. And I know I'm not the only one. I don't feel like waiting on that line. And even when I do, they don't have a lot of items that are in. And these are like regular items that are not, that are some of the biggest selling products that they don't have. That results in you going someplace else. But most places that you're seeing, especially restaurants, wherever, they have labor shortages. But Amazon said, look, we're going to invest in our people. And what does that mean? I mean, you're looking at a company that really didn't see that much supply disruption or disruption from the customer point of view. Yeah, there was a few things maybe that came a little bit later than expected. But overall, Amazon pretty much got the job done through COVID. And now you're investing in people at the most critical time maybe in the history of companies. Not just going into the holiday season, but we have the biggest supply disruptions the country's ever seen. I mean, it's insane. You see it. I mean, companies are reporting blowout numbers up 17, 20%, and they're like, we have supply constraints. Imagine what they would be if they can get their products because there's so much demand out there. But now you're going to Christmas holiday season. I mean, Amazon's going to kill it as their competitors try to go through this, this holiday period without spending boatloads to hire great workers. I see this a lot. Stocks get hit when they spend more, but you have to look at what they're spending on. It's very important. If you spend on marketing or spending on people, you're spending on, a little bit on M&A, or you got to look at they're spending money in the right areas. That's the biggest area for Amazon. They have to make sure that their systems, everything's up and running. People getting those packages delivered on time. I'm telling you, you're going to see a massive separation between Amazon and almost everyone else, the Walmarts, the Targets. Watch during the holiday season. They're going to kill it, and you're going to see that stock really, really soar. I take advantage of Amazon right here. But getting back to that separation, and we saw Intel compared to AMD. Look at Under Armour's numbers. Holy cow. I mean, you look at them compared to lots of sports apparel companies, including Nike, that reported a big inventory shortage last time they reported. Also, had China weakness a couple months ago. I don't think they reported yet for this quarter, but that was last quarter. And the stock, came down pretty hard. It went to 150, and now it's been creeping higher. 165 right now. The all-time high is 175, even though they reported. So expectations are pretty high. I mean, nice job for Goldman Sachs, which we all criticize. Goldman Sachs initiated with a buy at around 150, and it's 165 already. Good job on that. But that separation that you're seeing is incredible with some of these names. Under Armour, man, sales exploded, margins exploded. I mean, that thing's going to get re-rated. That thing's going to soar a lot higher. A lot higher. I'm doing this early. It was up 8% now. I think it's up about 15, 20%, whatever it was. It is right now. But it's going to get re-rated because when you see sales exploding and they raise their guidance significantly, raise their EBITDA, and their margins are going high, what does that mean? They're not seeing the same problems that Nike saw last quarter, other sports apparel makers are seeing, which is supply constraints or limited pricing power. This company obviously has pricing power because its margins are going higher. I mean, that guidance was fantastic. Avis is another one. We have in the portfolio surged. I think it's going to be a 10-bagger now for us in Curzio Venture Opportunities. Recommend that a lot cheaper. Holy cow, that thing's taken off. Blew out the earnings. I think they reported like $10 in earnings or something. They were supposed to put $6. Unbelievable. Unbelievable numbers. But when you look, not everything is benefiting from the COVID rebound or the $11 trillion plus in government spending, which includes fiscal and monetary. So you have some management teams that are getting it done while others are struggling with a lot of those issues, supply chains, inflation. And you have to have pricing power. If your costs are going up, which they're going up for every single company in the world right now, you have to be able to pass those costs on to your consumers. And if you can't, look out. Dollar stores saying that they're going to start selling most of their products for over $1. Do they have pricing power? People go there to pay $1 for stuff. I don't know. I think McDonald's has pricing power. Chipotle obviously has pricing power. Under Armour has pricing power. Focus on those companies. Because these are the names that I see an explosion in their numbers. But there is a big separation going on, and it's pretty cool to watch. Management teams are getting it done, and some aren't, but that means it's a stock picker's market now. Not everything is going to go higher, and you have to be careful. So pay attention. For me, I'm seeing lots of good ideas, especially on the small cap front. So you look at small caps, significantly underperform large caps. If you look year to date, 6%. It's close to 10% if you take the past 6 months. where Russell's basically flat over the past 6 months. It surged early in the year. So the past 6 months, if you wonder, well, my small caps aren't doing that great and stocks at all-time highs, it's basically flat over the past 6 months versus a 10% gain for the S&P 500. But if you look under the hood, which I say that a lot, and I love the Russell, I've been following this small caps, love it. The majority of my career is what I did. Stocks Under 10 newsletter, you guys remember, at street.com. Kramer ran that newsletter, that product. But when you look at the comparison between large caps, small caps, the difference is much greater when you look under the hood, since most of the gains in the Russell have come from the larger names in this space. And you can say, well, the S&P 500, 20% is FANG and stuff like that. This is different. This is different. I mean, wait till I break down these numbers. So you look at the Russell. The Russell rebalances every year around June, and in May they come up with their guidelines, and it's pretty easy to figure out. May, if you fit in those guidelines within those market caps, you're going to go in, and if you're higher than it, you'll move up to the Russell, whatever, 1,000. But the $7 billion was the high range, which is extremely the highest ever, right? I think it was $5 billion last year, but $7 billion was the high range. So we had a company that was $7 billion market cap that was back in June. As of right now, today, this is only June, there's 35 companies with a $7 billion plus market cap that are trading in the Russell. This includes Asana, which is a $25 billion company, AMC, $18 billion. Avis was $12 billion before this 40% move, so it's probably like, close to 12, 17, 18 billion now. Crocs, $10 billion. Macy's, $8 billion. DigitalOcean, $10 billion. And these names alone, those names I just mentioned, probably have a bigger market cap than the last 1,000 companies in the index combined. So where am I going with this? If you're looking at the performance in the Russell, it's mostly driven by those top companies. Again, you can say the same thing for the S&P 500, but this is much, 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 much more concentrated. And these companies account for, these were like the FANG names in the Russell, they account for more than 50% of the total market cap. Well, you're looking at 20% for the S&P 500. But even if you take the top 25, 50 companies, maybe 50 companies in a Russell, you're looking at 2 or 3% of the entire index. That's being driven there by those larger names. With many smaller names in a Russell outside of banks and energy, two sectors that have done incredibly well this year, especially later on in the year, are significantly underperformed. If you want more proof, the Russell 2000 index up 17% for the year, yet 40% of the index is showing losses on the year. In fact, close to 60% of the index has underperformed the overall index. It shows you it's very heavily weighted on the top. So I'm seeing lots of underperformers, companies that do have pricing power, good management teams. They reported solid earnings. A lot of those earnings are coming out over the next week or two. Mostly the large caps are just about done this week. You'll have more next week. But the majority is done for the S&P 500. Now it's small caps. Now it's fun. But you're seeing some of these names just starting to benefit from the reopen tree. Names in the travel industry, yeah, they rebounded, but they're not past their COVID highs, their pre-COVID highs. Biotech has gotten murdered. Furniture, retailers, restaurants, fast food. Some of these names rebounded. Yeah, you're going to hear about the Chipotle's and some of the other ones, but, Steak and Shakes or whatever. There's a lot of names that have significantly underperformed. We're taking a look right now, especially when they report this quarter's earnings. So expect to see a lot of these names show up in crypto intelligence, also Curzio Research Advisory, which, as you guys know, is mostly mid to large cap stocks and growth names and stuff. But I may get a little more aggressive in this newsletter since that's where I'm seeing the opportunity. I always want to be flexible. So you might see a couple of small cap names with market caps above, 3, 4, 5 billion, which 7, 8 billion is considered small cap these days. It used to be under $1 billion, then it was under 3 billion, then it was under 5 billion. Now it's like under 7, 8 billion is considered a small cap. Amazing if times change. But expect to see a lot of these show up in crypto intelligence and Curzio Research Advisory again, because that's where I'm seeing the opportunity. Now, always want to get to a couple of questions with this podcast, which I love to do. And let's start with one from Mads. So he says, hey, Frank, what is your view on Nvidia? Expensive stock, but in super exciting areas. Example, AI, metaverse, autonomous driving, data centers, blockchain, gaming, etc. Should I wait until the report and see if we can get on sale? Other chip companies to watch. So, man, it's a good question. I mean, Nvidia is one that I missed by a mile. It's amazing. Stock right now is at an all-time high 260. And I like to look at where the analysts are with this company. And the analysts, of course, from their perspective, 37 buys and 1 sell. So expectations are high. Granted, they've been high for a while, and these guys have been right. But the median target for these analysts, the target price is 235. It's trading at 260. So think about that for a minute. If you're looking at those 37 buy ratings, look into this. So 37 firms, right? Of those firms with buy ratings, close to half have a target that's lower than the current price. Think about that for a minute. So you're telling your clients that Nvidia is a buy, and you're saying it's worth a certain price, and that price, which you're telling them to buy, is currently lower than where it's trading. What does that mean? Expectations are sky high, which is normal, again, for this name. If the stock trade all-time high, don't short it. Don't ever short a stock at its all-time high. Please wait for the chart to break down. Don't. Talking from experience there. Just don't. Look at Tesla. Just don't. Don't short these high growth names. But you look at it, has a market cap over $650 billion right now. It trades at 60 times forward earnings, but it's growing those earnings 30% plus, so that's reasonable. That's not expensive. I mean, you look at Disney. Disney's barely grown its earnings, and they're trading at 40 times forward earnings. So, you could command that higher multiple if you're in the right markets. So, like Intel's multiple is a lot lower. IBM's multiple is a lot lower. But some of these technology companies, Umbrella, AMD, a lot higher because they're in the right markets, the right growth markets, and they're growing those earnings. You have to look at growth. I mean, if you never bought a 60 time forward earning stock, you would have never had Apple during its early growth phase. You would have never had Netflix, Microsoft. All these companies traded 60, 70, 80 times forward earnings. But as long as you're growing, and those earnings continue to grow, and you're in the right markets, and you're innovating, you deserve that premium. That's why you look at Nvidia. A lot of people missed out on it because it was always a super expensive stock, trading for many years, over 100 times forward earnings. But look at the markets you're into. Matt, you mentioned that. Gaming, auto. Just all the right markets. AI. Markets where, you have incredible pricing power because you have pretty much the best products in the market right now. And much different than Intel, which you saw, which bombed the quarter. They asked me if it's a buy here. I don't know. I mean, the stock is up 70% year to date, easily outperforming everything. When I say everything, the S&P 500, its peers, and the 60 times multiple, be careful. Earnings are growing, but if you look at sales are up 50% year over year, easy comparison to COVID, but starting in 2023, which is not that far away, right, almost in 2022, the growth in sales is going to slow from 50% to 10% annually. And that's not just 1 year. That's what the analysts are expecting over the next couple of years. So finally, you see it built. Listen, they fit into that $650 billion market cap, but these guys are really going to have to report incredible earnings, which they will, but expectations are sky high. And even with the analysts who love the stock the most, think it's worth about 10% less than where it's currently trading. So could you get upside in it? Yeah, absolutely. You could, but you look at other chip names. I mean, I wouldn't really go to Intel here, not after that quarter, even though insiders are buying, which I like to see when a stock gets nailed. Ambarella is really getting the job done. Some just good names in the space. AMD, I told you to buy it. Like, it's a company I own. I sold it too quickly, but I did do very, very well on it. But the stock that hit 90, came back down, hit 95, came back down. Chart just pushing through that 100, and once it did, it was gone. It was like, this is a great buy right here. Buy it on Twitter and everything, and then it did. It continues to go higher. And these are the chip companies that are getting it done right now. That's where you want to be invested in. You look at quarters, you're going to see companies that have the pricing power, companies that beat estimates and still saying, which is the majority of companies, guys. They blew away estimates, and they're like, we still have supply constraints. Think about that for a minute, because those will go away. Under Armour, they went away a lot faster compared to Nike, but Nike, they're anticipating it's going to be much, much better, and they're going to blow out the quarter because last quarter was terrible. Slowdown in China, the biggest growth market. Margins got hit, but it's pushing up to its all-time high, right near it. So we'll see. But pay attention to the separation, too, and a lot of names. I mean, you're looking at Chegg, and holy cow, that got nailed. Education companies, although most educational companies have gotten hit now that when the COVID is eased at least. And when it comes to chip companies, Matt, good question. Awesome question. I wouldn't be a buyer in Nvidia, but then again, maybe I'm the last person you should ever talk to about Nvidia because I missed the whole move up on that name. I did well on other names, but that was a name that I stayed away from. And those guys have proved me wrong. I go to Consumer Electronics Show every single year, as you guys know. They always blow it out, have the best products. Their booth is completely jammed. They have 2 or 3 booths there, which, again, we're talking about not a lot of money for a $650 billion company, but it's a lot of money to go on separate floors. And they're on the main floor. They're in the autos as well, a massive section there. Again, this is all going to be open in January. Should be a lot of fun. Hopefully they're not crazy with masks and stuff like that, which I think they are. So I think I'm going to have the vaccination passport on me. I'm going to have a mask that says I had COVID and recovered, and then I'm going to wear a mask and say if anyone gets infected from me, that would be one of the most amazing things in history. Yeah, that's the way it is some places, unfortunately, and it's crazy. But we should have fun. That's coming up in, I think, the first week, the January 5th to January 9th or 10th. And, guys, I get the media badge because of the podcast, so I have access to so much stuff. Early access, and a lot of times they close down booths for me to really talk to so many people there and do videos. Going to be publishing a lot of this stuff on YouTube. So, we did a good job 2 years ago. Last year, obviously, it was COVID. It was a lot of fun. And, I'll let you guys know when I'm doing that because there's going to be a lot of live videos and fun stuff and really cool things that I try. I look like an idiot and stuff like jumping in a big, gigantic tank of water and getting soaking wet and swimming around one of these seated type things, which I ended up buying. But a lot of fun. It's gonna be a lot of fun this year, so it'll be really, really cool. And let's get to one last question here, and it's from Brandon. He says, "Hey Frank, I hope this email finds you and your family well and you're not too stressed with the craziness of building a home. First of all, I want to say congrats on the T0 announcement and that I love your new format because it seems like it's giving you the flexibility to address more issues in even a more timely manner." You're exactly right. Like, we could talk about things right now. Like, Avis just reported today. People got to be listening to this. This is today. So it's not just Wednesday and we're reporting at the beginning of the week and then Thursday and Friday. So, the fact that, you'll hear from me and Daniel tomorrow, that's going to be on everything reporting. It's more real time, and it's resulting in a lot more downloads, by the way, which is really, really cool. So getting a lot of positive comments. I appreciate that, Brandon. He goes, "I'm sure it's more like work, but I think I'll really pay off in the long run," the podcast. Because as an older investor, the complexity of crypto, STOs, NFTs seems really complex and confusing. On paper, I've made hundreds of % of gains, but that means nothing to my bank account. Oh, for now. Because I watched your awesome video and have spent around 15 hours over the last week reading everything I could come across on cryptos, STOs, NFTs, and the metaverse. There's a question. I wonder if you could help clarify something for me. Some of your picks in crypto intelligence require you to buy a crypto like Bitcoin from Coinbase and then go to another platform and sign up to buy one of your other recommendations using the crypto from Coinbase. When you do that, say your Bitcoin goes up a few dollars in the time it takes to buy another recommendation on the platform, does a Bitcoin count as a security sale that you have to claim as a gain on your taxes? Do most purchases end up being a taxable event? Binance no longer available to U.S. citizens. Could this happen to other platforms? See what I mean? I know I need to just go for it, but life experiences keep keeping me from pulling the trigger. Any generic advice you have for some of your older subscribers would be appreciated. I don't think I'm a total lost cause. I have opened an account on T0 in anticipation of buying your CEO token, but I admit this is a pretty straightforward process, the same as any brokerage firm. Thanks for everything you do and what your team does. Brandon, from the second freest state in the union. You don't have that state here listed. I'm going to guess and say it's Texas. It's either Texas or if you think Florida, whatever. But a few things here. First, I love the fact, being an older investor, that you are getting into crypto. It's a learning curve, which is fine. I'm learning as well. There's just so many industries. But you say you spent about 15 hours over the last week. That's how I am every time I'm researching this. I feel like it's 3, 4, 5 hours goes by and just learning and just seeing the brilliant people in this space and how I can contribute, being from the Wall Street side of how I could see some of these things really develop, how we can make money off of them, what are going to be a project in the future. Are some of these companies going to go into STOs, which we're going to have a lot of access to since we have one of the first, security tokens launched that went from, raising money to actually trading. You're right about T0. It's the reason why we're switching. U.S.-based account. U.S. company trading, on a U.S.-based platform. That's what we wanted, and it's easy to set up an account there, which we're going to be trading in a few weeks, probably early December. So that's one of the things that, I really, really love. You're asking me about, tax questions and stuff like that. Realize that, stable coins are huge, right? So USDC is on Coinbase. So when that money is kind of like when you sell a stock and it goes into a money market account, similar. You saw the other day there's regulations coming out. They should regulate this. You need to know that that is stable, right? You want more regulation, especially if you're doing the right thing. You need regulation in this industry. This way everything's stable and the system doesn't collapse. There's too many ties to big banks now. I like the fact that they're regulating. They're looking at it, the current administration, to regulate, not to the point where, they're going to crush the industry or anything, but you don't want to have a Squid Game freaking token come out and then the developers just leave and collect whatever, $11-12 billion, and everybody gets left hole in the bag and gets destroyed, right? That just recently happened. So there's a lot of bullshit in this industry as well. Again, people are doing the right thing like us. We want to see more regulation where people are safe and comfortable. It's going to lead to more worldwide adoption for everybody. So it's not necessarily where you have to sell your Bitcoin, where you could have money and transfer it into stablecoin, and that's kind of a money market account. You could transfer that into another account, or you could just go into, you could buy Bitcoin, or if you have Bitcoin and transfer the Bitcoin and sell it, and then you're all going to have tax consequences, but almost all the places that you're doing this on will send you records of this now. So, Binance, yes, you can't trade in the U.S., but, Coinbase, Gemini, Voyager, areas that you can trade. But yeah, you're going to have to, I wouldn't worry about the move in Bitcoin and the time you take it to transfer it. Coinbase, you transfer, it takes minutes. I've done it. It takes minutes to trade to other platforms where you see it, maybe 5 minutes. Sometimes it could take 15, 20 minutes. But most of the time for me, it's less than 5 minutes where you see that transfer go through and you could buy it. So I wouldn't worry about, 5 minutes time. And then you could purchase some of these things. Unfortunately, with crypto, you have to sign up to different platforms. You can't just, recommend a stock now in my other newsletters. What do? You go to E-Trade, you go to Fidelity, you go to Schwab, and you can buy it. Here, sometimes, depending on what I'm recommending in crypto and crypto intelligence, you have to sign up for a new platform. And it's for free. And, it takes about 5-10 minutes now for most platforms, less than that. It's just you sign up for T0, which is going to have a lot of security tokens. We're going to be trading there soon. But even when you sign up to wherever, if it's Kraken or Coinbase, this process is relatively quick. I go over this in my videos in crypto intelligence. And once you do that, you would transfer from one platform to the other, but definitely use stablecoins. That's where you're holding your money, where that can provide easy transfer, less cost, sometimes no cost. But that's the easiest way, where you don't have to sell your Bitcoin or Ethereum. You may have to, depending on how much you have in each, you might be holding everything in Bitcoin right now. Then you're going to have to sell a little bit to buy some of the other issues. But if you have it linked to your bank account and you transfer money in there, that would go into, stablecoin and something that can easily transfer over from one account to another, where, you don't have to really worry about those tax consequences. Anyway, if you're looking at Coinbase, you're looking at a lot of these platforms, at the end of the year, they should have these tax documents for you showing the buys and sells and stuff like that. It's the way it is. It's the way it should be with every asset. IRS needs to know if you're making money on it, you're going to have to pay taxes, which is fine. And that's leading to more worldwide adoption, which was seen like crazy. Google just invested, and so does SoftBank, invested in Grayscale. Has a $10 billion valuation. These guys are just starting to get into crypto now. And Grayscale's huge. More than just ETFs. They have data analytics platforms and purchasing companies like crazy. Now, you got the majors going in and saying, hey, we're late to the party. That's why you're seeing like the Galaxies, the Voyage Digitals, Silvergate. You see where that stock is, taking off tremendously. Another one. These are pure crypto plays based on the banking and trading, and a lot of companies are partnering up with them because they're early adopters, and it's a lot easier to partner with the best in the industry than start from scratch. Again, it's just early in the growth phase. So, Brandon, thank you so much for the compliments. Thank you so much for the kind words. I really appreciate it, and thank you for subscribing to Crypto Intelligence as well as everybody else that did. Hopefully that answers your questions. Any other questions, comments, feel free to email me, frank@curzioresearch.com. That's frank@curzioresearch.com. Thank you all so much for listening. Appreciate all the support. And the good news is, I'm going to see you tomorrow. Take care. I'll see you in a few hours. Bye.